Hello guys, how you all doing today? Welcome back to my channel, and today we are going to be going into price action, how to place a trade and when to place a trade using demand and resistance. Okay, and we're going to be analyzing these charts together so that we know the right time to go into the market. So currently, from what the market is doing, we can see that the market already came all the way from the buy position, went down all the way to the buy position, and currently it's experiencing some form of resistance in this area, right? In this area. So at this point in time, the market is consolidating. So we can't possibly take any trade right now. We need to wait for proper confirmation. So what we have to do right now is we can mark out our demand zone. Say we can mark out say our demand zone, right? So this area has been respected, for some time now. The market has been consolidating. Okay, so we need to make sure the market, the bluish candle, probably cuts across this rectangular box. If it cuts across this rectangular box and it goes up, you know, probably retest the same area. If it cuts across the rectangular box, goes up this way, and probably if it goes up, we also need to wait to know what the market will do after that, because usually it retests the same area. All right, it will also retest the same area if that happens. So we can't probably possibly take on any trade right now, but at least there are signs to help us understand that the market is going in for a buy. It's going in for a buy, right? So let's see what happens soon, before we take any trade. Meanwhile, I'm using alligator to analyze my chart, and I'm also using ATR. So this is alligator indicator. So usually whenever this green line crosses, crosses this blue and this red and comes all the way down like this, then it means the market is going in for a buy, for a sell rather. It's going in for a sell. But you can see the green line, it has crossed, but it's as if it's making its way back up, okay, to cross the line again, back up, which means the market is heading in for a buy. Right? Previously, when it came down, it made a sell, right? And that's this red candlesticks we are seeing. It made a sell. So right now it's going all the way back up, and you can see what the candlestick is doing right now. This green candlestick is making a move. It's making a kind of bullish movement to help us understand that there are a lot of traders in the market, but we can't possibly take a trade right now. We need to wait for this candlestick to go above this rectangular box, and even when it goes above this rectangular box, we can't still place a trade yet. We need to wait, because usually it always retests the area. It has to come back down, but in case it doesn't come back down and continues to go up, then we can say it's a buy trend and we can place a buy trade, right? So for now, we are going to have patience and wait. So meanwhile guys, we need to check on the ATR. Yeah, on the ATR. Sorry, I also need to do something here. Okay, okay. So let me pick up my tool and then show you guys something. So at this point, right, this is the peep we've been talking about. What ATR basically does is it helps you to know the number of pips the market is going to move, either going up or going down, either in a buy position or buy movement or sell movement, according to the different time frames we have. The market is not going to go more than 14 pips on 15 minutes time frame, right? On 15 minutes time frame, it's not going to go more than 14 pips. These 14 pips, either making its way up or down. That's on an average. Okay, so it might make 10 pips. Let's say it might make 10 pips. It might make 10 pips. Probably going up, right? And makes the remaining 4 pips maybe making its way down too. You understand? So on a 15 minutes time frame, on this 15 minutes time frame. But if we decide to change the time frame, for example, we go on a 4-hour time frame, you can see that the number of pip we have here has increased. We have 27 pips here on what, on a 4-hour time frame, right? 4-hour time frame. And what it means, like I explained on a 15 minutes time frame, is that the market is going to go 27 pips. It's going to go 27 pips, either making its way up or down. It could go maybe 20 pips up, hopefully if the market goes in a buy position, and then but before it makes its way up, maybe it might just go up, down, making a bullish, making a higher high, higher low, or consolidating within an area. So that's what ATR basically does. So some persons might decide to just use ATR to analyze a chart, and they don't mind. They might take a smaller lot size when going into the market, into trade. They might take a smaller lot size, knowing that no matter how much this market moves, all right, it's not going to go on more than an average of 27 pips. Okay, let's even assume, okay, it goes beyond 27 pips. Let's assume it goes to 40 pips, right? Either making its way up or making its way down. It makes say 30-40 pips. It all depends on the lot size you use. If you use a good lot size, using a proper risk management idea on your trade, and you use a smaller lot size, definitely before this market will go against you, either making its way up or making its way down. Maybe let's assume you place the trade and the market start going against you, against your direction. So it actually means that you don't have to fear. You don't have any reason to be scared, because the market is not going to go against you to the extent that it will blow your account. So that's why we tell people to use a smaller lot size. That's why we tell people to use a smaller lot size. All right. So that will definitely help if you use a smaller lot size. So we go back to 15 minutes time frame, because usually if you want to place a trade, it's often best for you to use 15 minutes time frame, 5 minutes time frame, to see the picture of the chart clearly before you jump on any trade. As a day trader, you can analyze a chart first of all using the 4-hour time frame to see what the market is doing on 4 hours time frame. So if you see what the market is doing, you can now decide what next. So you can also check on 1-hour time frame, see what the market is doing before you take your final decision to jump into trade using the 15 minutes time frame, the 5-hour time frame. Some persons go as far as 1 minute time frame. And then when we talk about time frames, this is exactly what I'm talking about. So you can see the 1 minute time frame up there. If you decide to go for 5 minutes, you see it also changing position, changing numbers rather. You see the 5 minutes time frame there. So anyone you switch to, you always see numbers changing up there. So we go back to 15 minutes time frame. You can see currently the market I think is going in an uptrend direction, which means you can possibly take a buy now. The market has done its thing. It has crossed this box. You see this demand zone, because we actually marked out this demand zone using this rectangular box. So it has crossed this demand zone, and it retested it over and over again, and it's going up. So right now we can possibly decide as, okay, if we place a trade, we can put our stop loss, maybe usually 2:1 risk to reward ratio, 2:1 risk or to reward ratio. You can just take a trade when you know you'll be losing much more if the market goes against you. So it's even best for you to take maybe 1:3, 4, 5 risk to reward ratio. So in this regard, if we decide to place a trade rather, we'll place our stop loss maybe below this place. Yeah, we'll place our stop loss maybe somewhere below. Sorry, I just need to delete this. 1, 2. Pick it up again. So we can place our stop loss, say somewhere here, right? In case the trade comes back down, we know that we might not lose more than 10 pips. But if it goes up, at least we need to take profit within this area. You can see at least this area is best to take profit, because the market at this point is experiencing some resistance here. So usually when a market comes back to this kind of position, it doesn't just cut across it without experiencing some little resistance. So if we decide to take a trade right now, we're going to take profit around this area. So that's just it, and let's see what happens. So guys, we are placing a trade now. Having analyzed our chart, we can see that the green candlestick in the bullish position or bullish trend has already broken our demand zone. That's this rectangular box. So at this point in time, we are going to place a trade. Say we're going to take 0.1 mini lot, 0.1 lot size, and that means we're going to make a $1 per pip movement, right? So we're taking a sell trade. All right, when we take a a buy trade, because the market is going up, then we take our stop loss. We'll put our stop loss somewhere here, 1.23520. Okay, we're already in profit. I haven't analyzed this chart properly. So this is stop loss 1.23. Okay, let me check again. 1.23520, right? 1.23520. So these are stop loss. Okay, these are stop loss area, and for our take profit, we need to take profit, at least our first take profit at this zone, and maybe our second take profit maybe at this other point. The market could even go across much more than this zone, but first, for us to be on the safe side, we take our profit at this area. Let's say 1.23880. Okay, although the risk to reward ratio is very small, so we are going to adjust our take profit by taking, maybe when we get into profit, we can adjust this stop loss. Rather, we can adjust our stop loss to somewhere closer. So maybe when we also get into profit, like when we get into much profit, higher profit, we can use a trailing stop or get our stop loss in a position whereby the trade is going to be a free risk trade. Okay, so in the meantime, let's see what happens. We'll have some patience, and then let's take our stop loss first of all, 1.23880. Okay, 1.23880, right? 1.238. Okay, let's say 89. So I decided to take profit here, to place our take profit here. So the market is actually in a direction, so I want to pause this trade and come back to it after some time. I can open up more than one position because we can see that the market is in a direction. So we're already in profit here. Let me open up one more position, 3 positions, using same lot size, buy. So we wait for the market to do its thing. So guys, we're back to our chart to see what the market is doing right now. Remember, we placed 3 trades. All 3 trades are in profit, so we're going to have some more patience to see what we can get out of the market. So we are hoping that the market gets to this point, so I take profit. Or even before I get to my take profit, I might close the trade, okay, if I see how the market is doing. So sometimes you don't really need to wait for the market to go to get to your take profit. You can close the trade. That's if you're a day trader, we can also call it scalping, okay? Can also call it scalping. So meanwhile, we're going to pause this trade, have some more patience, and see what the market is going to do soon. So if you've not subscribed to my YouTube channel, kindly do so by clicking on the red subscribe button. Comment down below, guys. Click on the like button and the bell notification so that when next I upload any video, you'll be among the first persons that will receive it. Okay, please